Welcome everyone to 76 Research. I'm Trish Regan. I'm joined by the co-founder with me of 76 Research, Rob. Good to see you as always.
Great to see you, Trish.
Welcome to everybody who's just tuning in. So we just, Rob and I have these conversations every day. And one of the things we just thought was, why not actually do these with you guys so that you can sort of participate and hopefully get a little bit more knowledge about some of the most pressing issues in our times, in our economy, in our markets right now. And I think that it's incredible when you look at what the market's doing right now. Rob, 40,000, and yet we have a lot of, if you would, sort of systemic risk, right, that's out there on the table, because you look at what's going on in terms of these debt loads, which frankly are, by most estimates, Jamie Dimon said it this week, CEO of JP Morgan, and then you had Ray Dalio, who founded Bridgewater. Smart people. And they're like, this is kind of getting nuts, and it's not sustainable, and you're going to get into an environment where you're barely growing enough just to service the debt, a la some kind of banana republic. People talk about us being a banana republic politically. We're also looking at some economic headwinds that really suggest we don't have our act together. And yet, you still need to invest in this environment, I think, and I believe, and I believe you do too, right? Because otherwise, all that inflation comes and you're still not able to kind of keep up with things, right? If you put all the money like in the mattress,
Yep.
It's not going to do any good for you. What are your thoughts just on the current landscape?
Yeah, no, you're right. And we do have this looming debt crisis. And I think it's a great thing now that, the likes of Jamie Dimon or Ray Dalio, they're starting to flag it. I think it's intimidating in the sense that it feels like we're headed to financial catastrophe, and in a way, perhaps we are. But that doesn't necessarily mean you want to be out of stocks or out of risk assets. Kind of paradoxically, I think the most likely outcome, if we don't get our hands around the debt problem, in a way, it could be beneficial, over the long term for owners of real assets and owners of businesses and commodities and gold. So, and the reason for that is the ultimate solution might be some kind of monetization of the debt, or, as people say, inflating your way out of the problem over the long term. So you have to continue to be invested in stocks, and I think also in certain commodities, and really, with an emphasis on real assets, businesses that will participate in the economy, even if there is a lot of inflation and a lot of, kind of illusory nominal growth in the economy.
Yeah, that makes a ton of sense to me. And I think that's just, it's scary out there, right? By the way, I'm just tweeting out to everyone that they can join us live. So it's why I'm looking down at my phone. And this is a live broadcast, by the way. So you guys are welcome to join in on the chat and all that good stuff. But anyway, I think that's the real sort of head when people are worried. They're like, well, what if we have another 2008? They don't want to see their savings just eviscerated. And yet, simultaneously, you risk having your savings totally eviscerated by the reality that your dollar is going to be worth less and less. At least I think you can take some solace in the fact that, all right, if there's inflation, first of all, you want a well-diversified portfolio, of course. And part of that includes various things that we talk about, right? We have an inflation-protected portfolio at 76research.com that people can go and check out. But I think that you want to be diversified, but you want to be in this market because the market is going to keep up with inflation. That's just, one of the realities. And there's different sectors you can look at, specific companies that you can look at to help you manage that and continue with the times. It's amazing to me, right? You think about the challenges that we had during March 2020. And I kept saying to people at the time, I'm like, this is crazy. I realize everybody's completely freaked out, but that the Fed is going to take this opportunity to print like there's no tomorrow. That Donald Trump is going to want to sign the checks with his name. Heck, Biden did it too, right? The third stimulus check. Any excuse to just bring buckets of money onto the table they were going to take. And so I think knowing that there were these inflationary pressures that were probably coming down the road actually made me more convinced that equity markets were still an opportunity for people. And I guess I still look at it in that way.
Yeah, and we see what's happened, thus far in the month of May. I think I was on with you on your show right on the last day of April, and April was a rough month for equities. Interest rates had kind of crept up, and the inflation data was bad. But now people in the market are talking more about, more towards the soft landing scenario. Long-term interest rates have nudged down, about a quarter point or so. So now here we are, markets pressing all-time highs, and we do have a very heavily stimulated economy, and we saw that maybe evidence of that recently with Roaring Kitty, kind of roaring back to life, and sort of the
Roaring Kitty. Yeah, if anybody doesn't know who Roaring Kitty is, I think we did a whole segment. I did one anyway on my show, but the meme stock phenomenon, right? Like coming back to life. He's been awoken. He's come back after 2.5 years, and he has a thing for AMC and GameStop. I mean, I don't like it, and I know you don't either, because I think we're both very fundamentally oriented people. And in terms of investing, it's what really governs us. But it's interesting nonetheless to watch, and perhaps it is indicative of something, right? When you see the
liquidity, right? It's also like there is all this cash sloshing around out there, and when these kind of when GameStop can go flying up because of a tweet, that's sort of an indication of a lot of liquidity. So, I think, look, there's a lot of money out there circulating from the investment side, from the spending side. It's inflationary. And, I think the key is to really find the right spots.
The value opportunities. I mean, by the way, shameless plug here for us. I just want to flag everybody. So one of our stock picks was actually, here it is. Here's the total return. This is, as of a day or two ago, basically up 22% versus the overall market being up 4%. So this is something that we highlighted actually in the 76 report, which is a bi-monthly newsletter that comes out. It's something that's in one of our model portfolios. And, it just sort of speaks to, I think, what we recognize, this isn't just an inflation play. It is to a certain extent, but it's also a play on resources and on commodities. And I think that in an environment where you have higher inflation and you have restricted sort of commodity availability, et cetera, then it's natural that these kinds of stocks and these companies, specifically this one, because I know how much due diligence we put into this, are doing well. And it was also a good level, if you would, to get in at, because the company, as you can see, has grown some 22%. So in other words, I point this out just because, as easy as it is to say, I can't look, and there's still opportunity out there, and there's a lot of it. I mean, if you look at the birth of AI, and I was writing about this a couple years ago after having gone to Disney World, mind you. Yeah, I actually went there. Don't know as I go now, but I was at Disney, and I went on this ride called Soarin', and it was amazing to me because it really showed me the potential and the power for altering your universe, if you would, right? Like we talk about AI and all the amazing things that AI can do. And I have this prediction that one day, you'll be able to go into a room in your house and put on those goggles, and suddenly, you're soaring over the Atlantic Ocean, just like you do in the Disney ride. And you can feel the salt air and the smell and the wind and everything. And it's amazing, right? It's scary too at the same time. But I look at that, Rob, and I think I still see opportunity. I think, and I feel like we're back in sort of the beginnings of the tech boom. This is kind of another tech boom that's happening. And so while, yes, you want to be invested because of inflation, you also want to be invested in this new economy that I'm convinced is coming. Yep. There's going to be a lot of changes, but there's also with that a ton of opportunity for people.
Yeah, there are a lot of themes that, sort of regardless of what happens with interest rates and the macroeconomy, human progress marches forward, and we've got innovation, and we've got, economic development and technological development. So, you got to look past a lot of the noise. I mean, the macro is going to have an impact, but ultimately you want to buy businesses that really have good structural long-term outlooks. And those are really the ones that we're zeroing in on when we structure these model portfolios, because what we really want are good long-term investments. And to identify the ones that will really succeed for the long term, they need to be in those right spots and have those right kind of structural thematic backdrops, and to be well positioned within those particular niches.